Good morning. You're watching Trading Hour live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me is Reema Tendulkar. Reema, well, the markets are staging a very strong comeback after the uncertainties of last week, and the bulls are making a very, very strong move on the upside. Almost 700 points higher now on the index. The broader markets are doing well, on almost 13.5 lakh crore already added to the market cap of the BSE listed companies already by the first couple of hours of the trading day.
Oh, indeed. It's a big rebound and markets are rejoicing, right? Three things. One is the de-escalation between India and Pakistan at the border. Secondly, progress on US and China. These are the two largest economies, and the trade talks over the weekend were positive, with the Chinese authorities saying that they have achieved substantial progress and reached important consensus. So the street, the investor sentiment to that extent is buoyed. And then there is the potential of even Russia-Ukraine talks in Istanbul on the 15th of May. So the street is looking forward. Investors are looking forward to that. So, I mean, there's good news on multiple fronts this time, and that's what's visible on the screen. The Sensex has zoomed close to about 2,200 points. The Nifty is higher by nearly 700 points. It was at 24,700, and now just a shade below that. Across the board, there is participation. So it's not just the mid-cap index, which is up. The mid-cap index is up nearly about 3.5%, but metals, IT, capital goods, real estate, these are the stocks where you can see big moves today.
Plenty of stock-specific, earnings-specific reactions as well, right? And well, Triveni Turbine is one such earnings reaction, 9% higher on that stock. So doing fairly well for itself is Triveni Turbine. We just heard from the management a few minutes earlier. And the other stock-specific reaction, though, is Reliance Power. And that, too, is up 10% after the order win that came in from SJVN. And that stock is among the top gainers on the Nifty 500 today. Cera Sanitaryware is up 11.5%, is the top gainer on the Nifty 500 index. But let's get you some market opinion to start off the show. Sunny Agarwal, who's the head of fundamental research and retail desk at SBI Securities, is joining in. Sunny, good morning. Thank you for joining in. Before I get to your long-term investment ideas, a quick word on this market reaction of today. Would this mean that the focus now again goes back to earnings, fundamentals, growth, or does this still remain an overhang in the backside? What would you treat the market as right now?
Yeah, good morning. And yes, definitely, I think lots of global development during the weekend, de-escalation of tension between India, Pakistan, Russia, Ukraine, and at the same time, likely a trade deal between US and China, which are a kind of two largest economy. So just to give some number, the US run a trade deficit of close to $1,200 billion. And China account for close to 24-25% of that trade deficit out of that $1,200 billion number. So any positive, constructive deal from US and China on that front definitely augurs well for global economy, and obviously for an Indian export sector also. So as of now, it seems to be a pretty good runway, at least in the short term. I hope that there is no further escalation in tension as far as India and Pakistan is concerned. Coming to earnings, yes, definitely earnings this quarter has been a kind of a mixed bag so far. So we have seen a few companies delivering a better set of numbers within the sector. A case in point, ICICI Bank, HDFC Bank within banking as a sector. Housing finance, we have seen a robust set of numbers from PNB Housing. So again, a kind of mixed bag of earning so far. But again, we are hopeful that maybe 1Q FY26 is the quarter where earning downgrade cycle should bottom out. And again, we look forward to a kind of 10 to 11% kind of earning CAGR growth for Nifty 50 company between FY25 to FY27 period.
Sunny, hi, morning. Wanted to talk to you about some of your mid-cap recommendations. I think Lumax Autotech is one stock that you like. The target price is 854. That means a near 50% upside from current levels is still possible on Lumax Autotech. The other one is Force Motors. Your target price pegs it at a potential increase in the stock price of 35%. Tell us the rationale behind these two stocks.
Yeah, so coming to Lumax Autotech, again, a kind of sector agnostic play. So if you look at their product profile, predominantly they cater to products like head and tail lamp, plastic tank, door panel. And of late, they have acquired two companies. One is IAC India and one is Green Fuel Limited. So both of these companies definitely help them to gain a market share in leading OEM players like Mahindra and Mahindra. So post-acquisition, right now, Mahindra and Mahindra business share is close to 26%. Bajaj Auto, within Bajaj Auto, Chetak is doing well. So they are getting 15% of the business from Bajaj Auto. What we are expecting is that post this acquisition and consolidation, the company is likely to post sales of 4,600 crore in FY26 and profit of 300 crore. And at the same time, trading at a very reasonable valuation. And historically, we have seen that Lumax has been able to deliver on a strategy of acquiring business, consolidating them, and scaling them up profitably. So trading at a reasonable valuation. Hence, Lumax Autotech continue to remain one of our favorite pick as far as auto AMC is concerned. Coming to Force Motor, again, there we have seen that in FY24, company has shut down their tractor business, which was a kind of loss-making drag on the earning. And now, post their launch of Urbania, which is a premium product as far as Traveler as a product is concerned. So there we are seeing a very good traction. Even if you look at an April 25 sales number, the numbers have grown by close to 40% for Force Motor. Again, we believe that the company against a debt-free balance sheet, and at the same time trading at a very reasonable valuation, close to 18 times FY27 price to earning multiple. We are penciling in close to 30% kind of PAT CAGR during FY25 and 27 period with an ROE profile of 17 to 19%. So our fair value target on Force Motor is the 13,200.
The other metal name that forms a part of your recommendations and has a substantial upside, Sunny, is Nalco. And you're expecting close to a 50% upside there as well. But what drives you to be bullish on Nalco, especially considering there are other bigger metal names to consider, be it Hindalco, Tata Steel, or even for the likes of JSW Steel or JSPL? Why Nalco?
So coming to Nalco, again, it's one of the lowest cost producer as far as aluminum is concerned. And what makes us comfortable in Nalco is the favorable risk-reward ratio. So if you look at valuation, trading at a very reasonable valuation, EV/EBITDA of close to 5 times FY26. And again, at the same time, if you look at a non-ferrous pack, aluminum prices have been relatively stable, hovering in between $2,400 to $2,600 per ton. And again, recently they have won some mining rights also. So we believe that valuation is something which gives us a lot of comfort as far as Nalco is concerned. So we are penciling in close to 4,500 crore PAT number for FY27. And that is the reason we have chosen Nalco among the entire metal pack.
What about pharma? US President Donald Trump has said that the pharmaceutical prices in US are very high, and he's going to sign an executive order at 9 o'clock US time and bring down prices by 30 to 80% by instituting a most favored nations policy. Now, pharma stocks were clearly worried, names like Sun Pharma, Cipla. I think the index was down 2% in open, though it's managed to recover. What are your thoughts on pharma and this overhang?
Yeah, I think would not like to read much into the just basis of one tweet. So would like to delve into the detailed policy, what exactly our US is trying to do as far as pharma is concerned. One has to keep in mind that anyway, generic as a business is not commanding such a high margin. It is only a formulation piece which is likely to get impacted. So again, I would like to wait for more clarity from US on the pharma front.
Wait for more clarity from the US on the pharma front. Of course, we'll get more clarity maybe later tonight, at least if not on the tariffs, at least on the drug pricing front. But Sunny, thank you so much for sparing time and joining in today with your views on the markets and on specific stocks as well. We take a short break. Just before we do that, KPR Mill is another earnings reaction. That's down 8%, the top loser on the Nifty 500 at a time when the broader markets are soaring and soaring higher in today's session. Take a short break and back with the commodity space with Manisha Gupta. Welcome back. The markets continuing to do well for themselves, almost 700 points higher on the Nifty, actually 700 points higher now on the Nifty. Above the mark of 24,700 is where the index stands. Of course, the biggest single day gain this year by a distance for the markets, and it's good going. The other positive trigger, though, which got lost amidst all of these border developments, was the onset of the monsoon, and the IMD making a forecast that the monsoons will reach Kerala on the 27th of May, and that has also resulted in a lot of these stocks like Escorts Kubota and these tractor manufacturing companies doing well for themselves. Escort Kubota at one point was up 7% in today's session, still holding on to gains of 6.5%. But more details on the monsoons, Manisha Gupta is joining in just for that. Manisha, good morning.
Morning, and thank you for that, Hormuz. As you very rightly said, we have all positives when it comes to monsoon 2025 right in front of us. The onset is also expected to be earlier on 27th of May, and that chart should tell you if you look at the last 5 years, really, this is going to be an early monsoon onset. That doesn't really tell you much because the intensity of monsoon in the month of June also varies. It's not the most important month also, by the way. It is majorly July and August when the Indian Kharif crop needs a lot of good rain and monsoon and dams filling as well. But the onset being early does give you a better story. Also, when you look at SkyMet and IMD, both of these forecasters, the public and the private, are talking about normal to above normal monsoon this time around. While SkyMet has forecasted 103%, IMD has talked about 105%, just about above normal. 96 to 104 is normal. Above normal is when it starts from 105% there. I also want to talk about on what we've done in sense of monsoons in the last couple of years as well. Well, remember last year as well, we had a great monsoon at 108%. It wasn't projected like that, but by the time the monsoon ended, we had very strong rains there. Before that, in 2023, it was much lower at around 94%, but then again at a normal stance there. So last couple of years have been good as well, and this year as well promises to be quite on the positive side. Another important thing to note is that SkyMet and IMD both are talking about stronger possibilities of normal to above normal monsoon at around 30 to 40% there. Above normal expectations holding above at around 30%. Excess also is on the higher side. Deficient monsoon is something that both of these forecasters are not anticipating at all.
All right, Manisha, thank you so much for that update. Positives coming in from the monsoons as well. Now, 27th of May is the date that the IMD has predicted for the southwest monsoons to hit the Kerala coast. Now, shifting focus back to earnings then, and Motherson Sumi Wiring reported their results last week, and it was a steady quarter. Revenues were up 12% year on year, but the profits saw a drop. Then meanwhile, commodity price increase also resulted in a drag on the margins. Now, to discuss this and more, we are now being joined by Mahinder Chhabra, who is the CFO of the company, and Anurag Gahlot, who is the COO of the company. Mr. Chhabra and Anurag, thank you so much for joining in for the quarter gone by. I'd like to start off by asking you, gentlemen, about the electric vehicles space. First up, what has been the total contribution from this segment to your overall top line? What is the kind of growth that you are projecting in FY26? And once all the greenfield plants begin your operations by the second quarter of FY26, what is the kind of total capacity that you're anticipating and the incremental revenue opportunity that you can generate from that?
Okay, good morning. First of all, thanks to inviting us on CNBC. I would like to say that EV is contributing approximately 4% of our top line at this moment. Our expansion, which we have declared, which is going to happen in Q1 and Q2 of FY26, they are having ICE and EV both models. So currently we are supplying to all the categories of EV, whether you talk about passenger vehicle, commercial vehicle, buses, trucks, lawn movers, and two-wheelers as well as. So we have a good experience in manufacturing EV products and are ready with whatever the volumes will come up or given by the customers. Just to come back on to these ramp up of Q1 and Q2, there is upcoming growth is quite substantial, as we had explained in last quarter as well, that once full volumes get kicked in and sales happen as per the customer plans, so these three new greenfields will going to contribute a growth of approximately 20%, which is very big. And we believe that this should be sometime in H2. So this is part of ICE and EV both.
Okay, got that. And just to complete the point, Anurag, so today the EV contribution is about 4%. One of your plants has started production, but there are others which are upcoming. So once they all come on stream, what will be the overall production capacity, and what do you anticipate the contribution of EV will be?
It is very difficult to say at this point in time because we have to see that how these volumes picked up. So if as per the plan, the volumes goes as per the plan, then it will be more than what we are today, obviously, because these two new plants are going to contribute approximately 20% growth. So you can understand that how much expansion is going to happen with these two plants.
Mr. Chabra, good morning. Thank you for joining in. A word on your margins, Mr. Chabra, because you had earlier mentioned that since the rise in copper prices is a pass-through, but margins have still seen a decline. Is there any other reason that you attribute the margin fall to? And what is the kind of margins that you are expecting for FY26?
Yeah, sure. So if we look at Q4, and because like Anurag mentioned, we are putting up 3 green fields. So there's an impact of the cost that is there for these 3 green fields. But if we exclude the impact of these 3 green fields, we have an EBITDA of 297 CR, which is a growth of 2.8% year on year. And as far as copper prices are concerned, yes, there is a pass-through arrangement with our customers, but that's at a time lag. So for a quarter, there could be a bit of impact, which will get set off in the next quarter. And hence, it would be better to look at a slightly longer picture. And therefore, if you look at for the full year, our EBITDA for the full year is up by 10.5% compared to last year for the units excluding the green fields.
What about localization, Mr. Chabra? How does that work in the wire harnessing business? What are the kind of parts that you're looking to localize in India? And to what extent is it possible to localize it at all? If you could share a word on that.
Yeah. So first of all, localization is a very regular exercise, and team is very much kind of have focused to localize as many components as we can. And we have, as of now, today, we also still have a good amount of imports. And over a period of time, we plan to go for localization. The ultimate objective is the localization should be to the extent of 50%.
Does that happen?
Yes, that happens. Yes.
By when will that 50% target happen, Mr. Chabra? Is there a timeline that you have set for it?
So that 50% is for each and every project or each and every model. So when we start a new model, initially the import content could be higher, but over a period of time, the import content comes down. So there would be many wiring harnesses where the local content is more than 50% even today.
You said that, the margins X of the investment costs that you're putting in some of your greenfield is actually going up. The overall EBITDA went up by 12% last year. In FY26, what can you guide on the EBITDA front? Mr. Chabra?
Yeah, so as far as EBITDA is concerned, directionally, it should get better. As the new plants ramp up, the cost should come down for the new plants and EBITDA should get better. Having said that, as an organization, we focus more on ROS, and we have a guidance to deliver more than 40% ROS. Even in the current year, we have a ROS of 42%, and that is after 122 CR impact of the green fields. So if we exclude the impact of those green fields, it will be even better than 42%. So that is what we guide for as far as profitability is concerned.
Anurag, there has been a lot of news flow around the supply of these rare earths that has been stopped by China reportedly, and these 7 rare earths that are key contributors to the EV production line and so on and so forth. Have you witnessed any supply constraints on ground in the ongoing quarter? What is the situation that you're witnessing currently?
No, there is no as such impact of that. And in wiring harness, most of the time we are only using the, one main content is copper, and we are not seeing any abnormality in the supply chain for that.
You've always said, broadly that, led by premiumization, a gradual shift towards EV, we are seeing a higher content per vehicle. And that's been the driving force for the company's expected profitability over the medium to longer term. Anurag, if you could tell us, is there a number that we can put to it? And what would be the extent that this higher content per vehicle will go up?
You have to understand one thing. The new models which are launching, they are launching with very advanced interactive interface for rich consumer experience at this moment. and they are built by the state-of-the-art wiring harnesses system for superlative functional density also. So MS will package more content through I can say with a competency where the vehicle size remains same, but we are putting a lot of content into that. But it's very difficult to pinpoint that how the content from one vehicle to another vehicle will be, because as I explained, the new generation vehicles are coming with a very feature-rich models, whereas a few years back you won't see this much feature in the vehicle. So it's changing, but it's very difficult to pinpoint that this is going to hit the margins because of this content growth.
One final question from mine, Mr. Chhabra. You had mentioned that the passenger vehicles business is around 60% of your top line. Do you witness or do you foresee a segment concentration risk of sorts, or is this the mix that you would want to stay with, be it passenger vehicles being 60 and the rest being in that 7 to 10 to 15% range, or would you want to bring that down and focus on growing the other business verticals as well?
See, as far as MS Will is concerned, our focus is on all the segments, be it PV, CV, two-wheeler, off-road. It's more to do with the market. So we want to grow in line with the market or better than the market in terms of growth. So it's more driven by the market.
So I'm assuming that you would believe that in FY26 also the product mix relatively stays the same, right?
More or less same. That's what we think.
And for 12% revenue growth in FY25, would you expect a 15% in FY26, or would you be happy with 12 as well?
Well, we would like to grow as much as we can. Two factors. One, it depends on the market growth, the industry growth, and second, the content growth. So based on this, we have a very positive outlook for the coming year.
All right, Mr. Chhabra, Anurag, thank you so much for sparing time and joining us today to discuss the road ahead for your company. Wish you good luck for FY26 as well. By the way, the markets continue to remain strong. 24,700 is where the index currently is, 720 now, 710 points higher on the Nifty. I was just mentioning KPR Mills, that is down 8%, but a sector not doing well today on expected line, that too is pharma. Sun Pharma at one point was down almost 6.5–7%. That has recovered slightly from the lows of the day and is now down around 3.5%. And some of the others that are not doing well though include the likes of Concord Biotech. So no significant reaction seen in a lot of these pharma names, be it Lupin, Glenmark, Biocon. Most of them have recovered from the lows, and as you just saw a few seconds earlier, the Nifty Pharma Index is almost on the verge of breaking into the green. But we take a short break. On the other side, we discuss charts and a lot more with Aditya Agarwala of Invest for Edu and their top trading ideas as well. Stay tuned. Welcome back. And just as you mentioned, the index at the highest point of the day at 24,720. A pocket that is contributing to that gain is the tourism related names, be it hotels, be it aviation, be it the ticket booking platforms, all of them doing well in today's session. In Indian Hotels is up 6.5%. Indigo at one point was up 7%. It's now up 7.5% as well. And a lot of these other names as well, be it Ixigo, be it the likes of Ease My Trip, all of them, even IRCTC for that matter, is seeing healthy gains in today's trading session. Lemon Tree too at one point was up almost 5.5% to 6%. So IRCTC up 4% at 750 and Lemon Tree up 6% in today's session as well. Now Aditya Agarwala for Invest for Edu is joining in now for a quick chart check and some trading ideas. So Aditya, good morning. Thank you for joining in. After a move like this, 700 points on the index and counting, a 2,000 point move on the mid-cap index and counting, what do you recommend? Would you recommend booking profits at higher levels, or even partly for that matter, or would you advise staying put because there is more on the upside?
Hi, Orbas. Good morning. Thanks for having the show. I think there is more on the upside, definitely, because most of the negativity is already priced into the market after a good positive news. We've eventually broken out of that consolidation, which had been going on for a few weeks now. And clearly beyond 24,500, I see market easily crossing 24,800, which is an intermediate hurdle. Once 24,800 is taken out, I think we are on course to test levels of 25,200. So somebody is already in the market, I think so one should stay put. Just keep increasing your trading stop losses. That's it. I don't see any reason to exit from the market just yet, because if you look at the VIX, it has cooled off significantly from Friday's level, and it is maintaining that level of something below 18 or somewhere around 18 or mark. So I think this is something which is a comforting factor for all the investors and the traders. So one should really stay put in the Nifty and as well as Bank Nifty. I think the kind of move that Bank Nifty is showing in trade today, it's on course to cross that level of 56,000 on the upside and can easily test levels of 56,500. And from a sectoral point of view, I think apart from bank, metal is something, and autos, metal and autos, these are the two sectors which I think will contribute significantly towards the outperformance that I'm talking about in the markets. And both, I think, will benefit from the ongoing development as far as trade agreements are also concerned. I just go by the chart check as well. Both indices look attractive to me.
What about stocks? Since markets are headed higher towards 25,200, what stocks would you recommend?
So, Rima, I've got a couple of buy recommendations. One is Chola Finance. That is looking very interesting after a decent bit of a correction. Stock is up and away again. I think one should clearly buy at current levels. Look for a target of 1,700 on the upside on Chola Finance. I beg you, 1,900 on the upside in Chola Finance. And on the downside, can look for a stop loss somewhere around 1,500. So for a target of for the target of 1,900 to about 1,800 on the upside, one can actually buy Chola Finance. Second stock is on my radar is Exide Industries. This is one stock which has actually been consolidating for some time. At current levels, I would recommend going long on Exide Industries. I see a breakout coming here. Buy for a target of 420 on the upside with a stop loss at 360 on the downside.
All right, Aditya, thank you so much for sparing time and joining us today with your views on the index and on specific stocks as well. By the way, a key factor behind the surge in Indigo in today's session as well is, of course, the lifting of the NOTAMs, and the notice to airmen have been issued now to reopen all the 32 airports for civil flights that were shut all through a better part of last week because of the escalating tensions on the border between India and Pakistan, and now the NOTAM has been issued to reopen all the 32 airports for the civil flights. Of course, this is the CNBC-TV18 news break from earlier in the day, and Madhya will be joining us shortly for more details on this. But for now, the news is that the NOTAM has been issued to reopen all the 32 airports for civil flights. But the other news, the more important news from Friday evening spilling over to today morning as well, was the news on Yes Bank, where Sumitomo Mitsui has signed a deal to buy a 20% stake. Yes Bank at one point was up almost 9% in early trading, has cooled off substantially from the highs of the day. But Ritu is joining in with more details on this. Ritu.
Well, 5 years ago, you had this group of banks led by State Bank of India stepping in to rescue Yes Bank, and how things have now come a full circle. These very banks are getting ready to cash out, and with big returns. So you have Japan's Sumitomo Mitsui Banking Corporation, or SMBC, that is going to buy a 20% stake in Yes Bank at 21.5 rupees per share in a deal worth around 13,393 crore rupees. That makes it the largest cross-border investment in the Indian banking sector that we've ever seen. Now, to get to that 20% stake, SMBC is going to buy 13.19% stake from SBI, the largest investor in the bank at the moment, and the remaining 6.81% from 7 other banks, that is Axis, Bandhan, Federal, HDFC, ICICI, IDFC First and Kotak Mahindra Bank. Once the deal is done, SBI's stake will drop to 10.8%, and the other banks, these 7 banks, their holding will come down to 2.93%, and SMBC will become the single largest shareholder. Now, State Bank of India stands to gain the most, about 4,760 crores in absolute terms, which is a neat little 7.5% of its expected FY26 profits, and this also gives it a 13 basis point boost to the bank's Tier 1 capital. Apart from this, HDFC Bank, ICICI Bank will also see some sizable gains, but when you look at it in percentage terms, IDFC First Bank and Bandhan come out ahead, Bandhan, for instance, also gets a 10 basis points bump up to its Tier 1 capital. Federal Bank gets a 9 basis point and so on. Of course, the deal is still going to need the green light from the Reserve Bank of India and the CCI. Once approved, SMBC will have the right to nominate 2 directors on the bank's board. SBI will have the right to nominate 1. And here's also another interesting twist, so to speak. SMBC's parent company, Sumitomo Mitsui Financial Group, they already own an Indian NBFC, which is SMFG India Credit, formerly known as Fullerton India. So down the line, there could be questions about whether a possible merger of the NBFC with Yes Bank, is something that will be considered. But listen into the management that said, this is confidence capital and will help the bank get a re-rating.
So now it would require the approvals from Reserve Bank of India and Competition Commission of India. And we are hopeful that the whole transaction would be completed in the second quarter of this financial year. Re-rating itself would give us a lot of opportunities both on funding side as well as on the lending side. We are looking for a re-rating of this because in the re-rating, one of the issues was always in terms of what is going to happen to the SBI stake. That is one part. The second part, that with the re-rating, definitely your funding cost would also come down. Right? The third part is such a respectable foreign institution investing in you. It also gives you the mileage in terms of opening your door for a lot of other things.
That's the big story. The other one is pharma stocks. Well, the pharma index has recovered. It straight away opened with a cut of about 2%, but now is flat. And the news is that US President Donald Trump, in a post on Truth Social, said that he would sign an executive order today, which would cut prescription and pharmaceutical drug prices by 30 to 80%. Ikta is here with the details.
Well, yes, this story is that on Truth Social, President Trump has announced plans to sign an executive order Monday morning to slash drug prices by 30 to 80%. He says that the US will implement a most favored nation policy, matching the lowest drug price paid anywhere globally. The move is expected to target high-cost branded drugs, but generics could also feel the pressure. A similar plan in 2020 was blocked in court and had applied only to select Medicare drugs. Meanwhile, the industry is watching closely for possible tariffs on pharma imports. JM Financial says the order, if implemented, could dramatically reshape the US pharma landscape. Generic and specialty players like Sun, Lupin, Cipla, Dr. Reddy's, Zydus, Aurobindo and Biocon could face headwinds. CDMOs may benefit from cost-cutting shifts, while CROs could in fact see revenue impacted. GM says the US biotech sector may also be impacted. However, if limited to Medicare or Medicaid, the move affects just about 25% of the market, according to JM Financial, and Indian generics have low exposure here or relatively less exposure. They also point out that reports suggest it may only apply to Medicare Part B, which is just 5 to 10% of the market, making the actual impact likely limited. So let's see what is announced by President Trump in terms of the executive order. The larger picture remains even the tariffs that they would eventually put on pharmaceutical imports, which is what the president has stated could probably be in the next couple of weeks.
Indeed, we'll be watching out for that. Not significant reactions, of course, in the pharma names. Most of them have recovered from the day's low. Sun Pharma included now is down only 3.25% is Sun Pharma. So we'll watch out for later this evening when Donald Trump eventually signs on that executive order and announces more details on that. But the other stock that's doing well in today's trading session is Birla Corp, and that is locked in a 20% upper circuit. Nigel is joining in with what's working for the company. Nigel.
Well, thanks a lot for that, Hormuz. Earlier today I had pointed out that if I had to pick a stock of the day based on results, it'll be Birla Corp. And the numbers look absolutely fantastic. Let's run you through the numbers first up. What was so good about the numbers? Well, the realization's coming up by close to 7% on a sequential basis. We know that cement prices at any part of the country didn't go up by around 7%. So there'll be an element of incentive income that's accounted for in that sales number. So we'll require clarity on that front. That's point number one. Point number 2 is with regard to the operational or the unit economics. You have the volumes that came at around 5.25 million tons. That's the highest quarterly run rate we have ever seen from them. So clearly the added capacities are ramping up. Not just that, they had the benefit of operating leverage. They had higher realizations and also lower input cost, which led the EBITDA per ton to come in at its highest levels in the last 18 quarters or so. So a solid operational performance is what we are seeing. Not just that, the net debt number, that is a cherry on the cake because it's not come down for last many quarters. But if you look at it from last year, quarter 4 to this year, quarter 4, it's come down by 700 crores. So that as well is the positive. And they have laid out a capex plan to move from 20 million tons to around 27 million tons. They've announced a capacity addition of around 6 million tons. And for that, they've earmarked close to around $82 on a per ton basis, which is a sharp discount in comparison to what you see for the replacement cost of roughly around $110 per ton. Talking about replacement cost, it has valuation comfort because the stock trades at around $60 to around $65 per ton. It explains why, put all the factors together, valuations, solid numbers, and deleveraging. The street likes it. Stock locked it upper circuit.
Oh, upper circuit, 20% higher for Birla Corp. And of course, looking at the analyst recommendations as well, not a single analyst out of the 21 who tracked the stock have a sell recommendation on it. So Birla Corp, the stock of the morning, potentially 20% higher on that name. Take a short break. Up next, we get you a sneak peek of our exclusive show, Market Cafe, with JP Morgan India's Sanjay Mukim. Stay tuned. We'll be back on the other side. Welcome back. Let us now get you a snippet from the latest episode of our digital offering Market Cafe. This week, Surabhi caught up with JP Morgan India's head of research, Sanjay Mukim, and discussed whether the earnings slowdown can become a structural problem for Indian equity investors. Sanjay also shared some of JP Morgan's top investment ideas in this chat. Take a look.
Most of our large FMCG companies are barely able to do 2-3% volume growth. They're flat, sometimes it's down. IT services, again, because of various global issues, not growing. So, in the here and now for the listed market, is earnings growth becoming a real problem?
It is. If you look at the tone of earnings that have come out so far for the March quarter, or the likelihood of earnings in the coming quarter, it's just not going to be great. Okay. And look, if there is a sentiment problem globally, because of the uncertainty around tariffs, that percolates to India as well. So corporate sentiment, who is going to set up, commit large capex in this environment? Very few people will want to do that. They'll want to wait and see how these things develop globally. Consumer sentiment is impacted similarly because of the headlines that you read on TV. Oh, if you're an IT employee, are you expecting a big bonus this year? Perhaps. Maybe you dilute your expectation, right? Yeah. Which then feeds into your consumption patterns and you become a little bit more cautious. So the Indian economy will feel part of that shock. We'll feel less of a shock than the rest of the world, but we will feel that impact nonetheless. Okay.
But that's the global part of the shock that's kind of percolating through. Mm-hmm. What about domestic? We were supposed to be a very resilient domestic economy. Then why is there sudden concern about local earnings, domestic earnings as well?
So if you take a, let's say, 10-year historical view, on an index level basis, large cap index, we've never actually delivered dollar earnings faster than EM. So this assumption that, India will have a beta to EM on earnings, it's never actually played out in the last 15 years. So the question I get from a lot of my investors, why am I then paying this multiple premium if you've never actually delivered growth? It goes back to everything we've discussed originally, is because there is an assumption of longer growth in India. Right, that you will get this growth for the next 15 years and therefore the valuation is still justified on a DCF, whereas in other countries you may still be looking at a 2-3 year growth period.
So instead of bursts of sharp growth,
exactly,
this is, higher for longer.
Higher for longer, a duration of growth. Okay. Therefore, to go back to your question, how do you make money in this market is by being patient. If you think that...
Everybody who came in after COVID in the market, please listen to this. It's all about patience. Yes. Please continue.
So, because again, to your point, to take it seriously, right? After COVID, people have made a lot of money, right? Because there've been this huge mid-cap rally. The growth was we were printing nominal GDP growth of 25%, which showed up in earnings when, the equity market straight-lined it and put a multiple on it and all that. That is not how equity investing works. Because I'm looking at more of a duration of growth than a premium to growth, The way you make money in this market is buy at a right price. If you can get a good quality company at reasonable valuations, sit tight. Good, well-executed companies in India will deliver compounding returns over time. This is not necessarily true for most countries, but it is true for India.
This is very interesting. So instead of forever searching for the burst of 9% and hit the headlines, which we people in the news love to do, we love our headlines, right? Instead of that, maybe compounding 6.5%, maybe 7% for a prolonged period can lead to prosperity. That's what you're saying.
Yes, be patient. Don't try to find the next multi-bagger. I mean, if you can, please go ahead, right? Success rates on that are actually lower than people expect it to be. Everybody believes that they are the one that has spotted this multi-bagger well. But it's easier to find large compounding companies, invest, be patient, you'll do well.
So what would the advice be for investors who are looking at this market for the next sort of 3-year perspective, if not longer? How should they look at their portfolios?
So again, quality and large cap, right? Because what has happened is even though several smaller stocks and mid caps have come off post the recent correction, they have not come off enough. So if I were to do a very simple mathematical analysis already and say which company today is back to 2019 Ps, not even say, I don't even say I'm greedy and I want them cheap or I want them, to fit a DCF or something. I'm saying which company has given up its COVID premiums, X financials, that set is still very narrow. So despite the correction, I have not getting stuff at reasonable valuation. Today, with whatever's going on in the monetary policy and the RBI turning accommodative, the outlook, let's say from a 2-year or 3-year view on financials is still reasonable. And they are still available to me at multiples that make sense. Okay. So any India portfolio needs to start off in a large cap mindset with a allocation to financials. The other themes we like power because the power sector is tightening. There's a lot of changes happening with the prevalence of solar. We think the battery world is very interesting because I was skeptical of it 3 years ago and it won't work. Now it makes economic sense to set up batteries in the country. We've liked cement for a while because it was undershooting and now it's catching up. Real estate should do well as we spoke of. But the only challenge there is we need real estate which is more mass market rather than the...
And rather than the 20 CR apartments selling in 6 hours.
I think 20 CR also nowadays is...
Now it's history. That's true,
That's
actually.
Right. But yes, so you need that kind of exposure. Within the consumer space, we think companies that are taking initiative, not necessarily only defending their margins, but which are stepping out and saying, here's some promotions, here's my sales effort, here's a discount for consumers, providing value to the consumer. See, the Indian consumer is not dead. I think the Indian consumer is just looking for value. So if companies take the initiative, they should get their volumes back.
The story of every Indian consumer always looking for value. We take a short break. On the other side, we get you all the latest related to Operation Sindoor after both India and Pakistan have agreed to stop military action.
Well, the markets are moving strongly, but one of the other stories that we continue to track very, very closely is the escalation of tensions between India and Pakistan. But here is the latest. Border areas from Jammu and Kashmir to Gujarat, which had seen renewed hostilities following Pakistan's violation of the ceasefire understanding just within hours of the announcement, remained calm on the morning of the 11th of May and last night with no fresh reports of firing, shelling or drone sightings. My colleague Parikshit Luthra is also here with me. We will, of course, give you a sense of what we are expecting now as far as that crucial meeting between the DG military operations of both India and Pakistan are concerned. That meeting will take place shortly. We've just seen the Prime Minister hold a meeting with the service chiefs as well as the Defence Minister and the National Security Advisor. And I would imagine that that meeting is crucial ahead of the DGMO talks because that meeting would have taken stock and put together its assessment of threat perception as well as things where things currently stand. Well, speaking of threat perception, what is very clear now is that there is some sort of a decline. There is some sort of a reduction as far as the threat perception is concerned, and which is why we've seen the government decide to reopen 32 airports across the country for civilian use, for civilian purposes. This is a story that was broken by my colleague Madiha. It is now confirmed. Madiha, 32 airports across the country had been closed for civil aviation, for the use of civilian aircraft, for the use of commercial airlines. But as of today, a NOTAM being issued, which for the benefit of our viewers is essentially a circular being issued to suggest that they can now reopen for all activities.
Exactly, Shiveen. It was our news break some time back. We were informed by airport officials about the reopening of these airports, and now it is confirmed. NOTAMs, which is notice to airmen to reopen 32 airports, have been issued, which means all the airports across Jammu and Kashmir, Punjab, Himachal, Rajasthan and Gujarat that were closed due to military action will now open for civil flights. These airports were closed for operations since the 7th of May. The closure was then extended to the 15th of May, and airlines had cancelled flights to these airports. About around 400 flights of different airlines were cancelled to these airports till the 15th of May. But the reopening of airport doesn't mean that all flights will resume immediately, as we are also seeing airlines like Indigo now issuing advisories about progressively resuming flights. So since airlines have to plan in advance, open bookings to inform passengers, some flights may resume later today, but most likely normalcy in flight operations may take some time. Also, it is important to note that Pakistan continues to close its airspace for Indian airlines. India also has closed its airspace for Pakistani airlines. So the rerouting of international flights for Indian carriers will also continue, and complete normalcy may take some time, but definitely this is an indication of normalcy returning.
Yes, Madiha, that's an important news break there by Madiha. So 32 airports which was closed for civilian purposes, for civil use, will now be operational. But as Madiha was pointing out, it may take a few days before normalcy returns, because airlines will now have to reschedule flights and so on and so forth. But that is a development that's already now taken place, a crucial development that will take place shortly. Are the DGMO talks, the Director General Military Operations on both sides will be speaking. Parikshit, the Indian government has made it very, very clear that the genesis, the start of the cessation of hostilities between both sides happened at the DGMO level, and they had scheduled another call between both sides today on the 12th of May, and that is what we're now waiting for.
Exactly. And what India has said, that this is a bilateral issue. This is not something that US is getting into, and frankly speaking, we've not acknowledged the US role in this crisis or mediating this entire issue. What India maintains, that when it comes to stopping firing at the border, it has to be done at the level of Director General of Military Operations. What this means now, we had reached an understanding on 10th May at around 3:35 p.m. that both sides will stop firing and military action at the border, limited to that.
Yeah.
There is no political understanding. Sources telling us that that understanding was reached without any preconditions. What do I mean? The Indus Water Treaty remains in abeyance. The economic actions that we had taken, suspending trade, suspending shipping, suspending postal services, all remains in place. Our diplomatic actions to isolate Pakistan remain in place. What the two officials will discuss today is how to give shape to that understanding over the next few days.
And whether that understanding moves to being an agreement.
Yes. But we also must tell our viewers, Shireen, that DGMO talks happen on a regular basis. They happen every week, even in times of peace. So at the most, what these officials would say, that we have an understanding right now. Can we continue this understanding till the time we speak next after a few days?
Yeah.
Is this a ceasefire? No. India has not called it a ceasefire. When it comes to making things normal at the border, it has to be decided at a political level.
Yeah.
DGMOs, frankly speaking, are only implementing the consensus reached. There's a meeting happening at the Prime Minister's residence right now, and this is where the political understanding will be communicated to the military officials as to what it is being done. The DGMO himself cannot decide for the country. He's only trying to cool things down, depending on what the political leadership has communicated.
Absolutely. The call has to be taken, the decision has to be taken by the highest levels at the political level, and that is why that meeting of the Prime Minister, along with the three service chiefs, the National Security Advisor, Defence Minister, is crucial ahead of that meeting. But, Parikshit, the good news is that we haven't seen any further ceasefire or any material ceasefire violations, at least overnight. And the indication coming in, even through the course of that briefing yesterday, was that what we saw perhaps on the night of the 10th was maybe not to be taken as seriously. The Indian side is ready for responding, but the message seemed to be that Pakistan's message had not percolated down to its own people.
Right. What India has always maintained, that we were not the escalators here. It was Pakistan responsible for the original escalation in Pahalgam. We're only responding to that. We are taking revenge. And since then, whatever Pakistan has done, we have responded. Having said that, you're very right that things were calm yesterday. Immediately after the understanding was reached on 10th afternoon, Shireen, we had seen heavy artillery firing across the LOC and also drone sightings across the border. That was responded to very strongly. In fact, via hotline, we communicated that if you're going to do this, we're going to hit back harder, deeper, bigger. Last night, you're right, the army has now issued a statement that we did not see any firing of drones last night. It was a calm night after many days of violence, which is a good sign. But India will remain circumspect and skeptical.
Absolutely.
Our defenses will remain on alert, irrespective of what happens in these DGM attacks.
Absolutely, and so that vigil and the standby continues. But Parikshit, let's talk about the US now, and particularly this dissonance that is emerging in the way that Pakistan is acknowledging publicly, tweet after tweet, in his speech, in his address to the nation, the Pakistan Prime Minister thanking Donald Trump, of course also acknowledging the role he believes other countries played. India has not acknowledged, forget President Trump, has not acknowledged any third-party role, including the US's role in this. The Indian statement issued by the Ministry of External Affairs has not mentioned any role of the US. They haven't talked about that call supposedly made by J.D. Vance to the Prime Minister either. So, this... and the manner in which President Trump has acted, with the tweet on the 10th of May, announcing the ceasefire on behalf of India and Pakistan to the world, and following that up yesterday on the 10th of May, almost putting India and Pakistan on equal footing, hyphenating India and Pakistan and saying that he will do more trade with both great nations. I mean, this makes our engagement with the US complex, does it not?
It definitely raises a question about our political and economic strategy. We thought that we should be the first nations, among the first nations to offer him a trade deal and get a reprieve. We managed to get a reprieve, and we're possibly going to get a trade deal earlier as well. But this only drives home the point that he's a president who is transactional. You cannot accept everything that he says at face value. He's not somebody, if he makes a promise to you today, that same promise will remain on paper 6 months later. So that is definitely true. And as far as the US role is concerned, India has made it very clear. In fact, top sources in the government telling us that we never sought permission from the United States or anyone. When we decided to hit Pahalgam, when we decided to hit targets in Pakistan...
After Pahalgam. The initiation of operations.
Yes, after Pahalgam, we only called up the US and said that, listen, we will be attacking terror targets in Pakistan. We will take revenge. Nobody needs to tell us anything. So we never sought anyone's permission. When US was calling us, we were keeping them aware about what was happening. And it was Pakistan which actually rushed to the US for help after India carried out Operation Sindoor. In fact, Marco Rubio called up the NSA, and we made it very clear that, we are all for de-escalation, but Pakistan has to do it first. We will respond to everything you did. You hit our civilians, we are going to respond. And, J.D. Vance had also called the Prime Minister, saying that there is serious intelligence that the US has about an escalation of violence from the Pakistani side. And the Prime Minister made it very clear that if Pakistan does anything, we will hit them very, very hard. And next day, on the 9th of May, when Pakistan hit our air bases, military bases in 26 or 36 locations across the border, India unleashed hell fury on them. We pounded 10 or 11 air bases of Pakistan. We damaged their air radar systems, some of the Chinese air defense systems that they had in Lahore, Sargodha and other places. These were F-16, JF-17 bases. We caused a lot of damage. And that's when Pakistan rushed to the US for talks. And literally, that was the off-ramp. US came back to India and said that Pakistan wants to talk. If they stop firing, will you do so? India said that whatever has to be done, it has to be done at the level of DGMOs. So this literally is the backstory. But US had
very little role. We did not acknowledge.
We have not.
US is not
we have
a
not
mediator.
acknowledged.
We kept them in the loop as an ally,
Yeah.
but we didn't ask them to mediate. It was Pakistan rushing to them.
Absolutely. So that is going to be a complex situation and a complex relationship to negotiate at this point in time. But that crucial meeting that Parikshit was talking about at the level of the DGMO, that will take place shortly. There is a briefing that's scheduled at 2:30 p.m. And of course, that is where we will hear from both sides, or at least from the Indian sides for certain, on what happens from here on. That's the meeting that we were talking about, Prime Minister Modi meeting with the National Security Advisor, with Jaishankar, the Minister of External Affairs, with the Defence Minister Rajnath Singh, with the service chiefs as well. That's the Air Force and the Army chiefs on your screens. Parikshit, once again, let's just piece together, because now on the back of last night's briefing that was done, we have a very clear idea of the sequence of events that took place, especially between the 9th and the 10th, because those two were crucial nights. The role of the Indian Army, the role of the Indian Navy, more importantly, the role of the Indian Air Force, pieced together the sequence of events between the 9th and the 10th.
Well, we had been operationally alert ever since the Pahalgam attack happened, so to say. And since Operation Sindoor, the level of alert was very, very high. Let me start with the Army and the Air Force. The Army, all right, so it's noon now, so we can expect those talks between the DGMOs to have begun. These are talks via a hotline, and I believe this conversation will be a brief one, where we will discuss what the status is as far as the talks
I would
are
imagine
concerned.
that this is going to be more operational in nature on what is happening at the ground level and so on and so forth.
Absolutely. No nitty-gritties, nothing political. What has happened, what you have done, how we will respond, warn you.
So we just want to be clear that it's not that the DGMO talks will decide the next course of action as far as the relationship is concerned. The DGMO talks will focus on the operational stuff. What is happening at the LOC? What is happening at this point in time in terms of any violations that may have been detected? India will obviously put forward its objections to what was done on the 9th, on the 10th night. So all of that will be what is discussed. It's not going to be, what is the shape or the contours of our engagement with Pakistan. That is not the purview of the DGMO, and that is certainly not going to be an outcome that we should expect as far as these conversations are concerned. Absolutely. With that perspective, Parikshit, back to you.
Right, and just to tell our viewers, in the meeting that happened at the Prime Minister's residence, you had the 3 service chiefs, you had the NSA, you had the Foreign Secretary, you had the External Affairs Minister. This is where consensus would have been made on what we have to communicate. The DGMO will only communicate the political will of the country. And, at the most, he will say that let's have this understanding till the time we speak next. And DGMOs talk all the time. So it's nothing unusual. Keeping in mind, coming back to your question, Shireen, what happened on 9th and 10th? We used all our air defense systems. We have an integrated defense shield. You've got the Akash air defense system. You've got the Shilka air defense systems. You've got the Barak air defense system as well. You've got the L-70 guns. And now these have, and also the S-400 air defense systems. So this has a range from anywhere between 70 kilometers till about 400 to 600 kilometers. So we were hitting targets, drones which are low flying, those which are high flying, and also we used our fighters such as the Rafale, the Sukhoi fighters to hit targets deep within Pakistani territory. So, for example, the fighters were used to hit terror camps which are about 200 to 300 kilometers from the border. The artillery guns and loitering munitions were used to hit targets which were close to the border. So those 9 or 10 terror camps, they are the biggest hubs for terror. We were told that Bhavalpur, Shireen, was hit the hardest. Now, coming back to what we did to the air bases, after Pakistan hit 26 locations in India, we unleashed the BrahMos missile. We used it to hit significant air bases in Pakistan. 10 or 11 of them were badly damaged. Their air radars in Lahore were destroyed as well. And that is what led to Pakistan asking us for DGMO talks. It was Major General Chaudhry, who is the DGMO on the Pakistani side. He called up Lieutenant General Ghai on the Indian side around 11 a.m. on 10, saying we want to talk. And that's when the talks happened in the afternoon. And the Navy also was at a very high alert. They were carrying out regular missile strikes within the Arabian Sea as part of their preparedness just to show a very strong offensive posture.
Yeah.
In fact, we were also keeping our eyes very closed to the Karachi port, saying and sending a message to Pakistan, if you have any misadventure, remember we have a very strong operational edge in the Arabian Sea, and we can do you serious
But that was
damage.
not an option that was exercised.
Not exercised. It was only a warning.
Yeah. It was only a warning. That was not an option that was exercised. That was what transpired on the 9th and the 10th ahead of the cessation of military operations. Remember, as Parikshit and the Indian government have been highlighting that they do not see this as a ceasefire. They see it as an understanding at this point in time. And perhaps we will get to see more details. Yes, Parikshit, any updates?
All right. We believe we will also be getting some speakers. We have several high-level experts who've been joining CNBC-TV18 over the last few days. They will be joining us as well. But those talks would have begun now. Around 2:30 this afternoon, we are expecting a briefing by top military officials. External Affairs Ministry would also be present. Remember, this is a coordinated response, a whole-of-government approach that the government is taking when it comes to our response to Pakistan. And just to tell our viewers, the economic measures that we have taken, suspending the Indus Waters Treaty for that matter, that has not changed. We will continue taking measures such as flushing our reservoirs to make sure that the flow of water to Pakistan is impacted. During this agricultural season, we will be seeing how Pakistan will get impacted. None of that is going to change. There is now a new normal when it comes to our dealing with Pakistan. Whenever Pakistan strikes us, it will be harder, bigger, deeper. In fact, we're told by sources that the message from the Prime Minister Shireen to top officials was that agar wahan se goli chalegi, to yahan se gola chalega. Our response will now be harder, bigger, deeper. And we've also communicated to Pakistan and also officials on the ground that next time you carry out any terror attack against us,
it will be treated as an act
of war.
Yeah. That is the latest at this point as far as the India-Pakistan conflict is concerned. But there are several other important developments that are taking place. Scott Bessent is expected to speak shortly. Remember, President Trump tweeting that an agreement has been arrived at with China overnight in Geneva. Contours of the deal have not been made public yet. Perhaps we will get more details. So we are going to take a break here and come back with more on the market action as well as with more on the India-China trade deal and what Scott Bessent has to say.